Chimerix is being bought by Jazz Pharmaceuticals for about $1 billion. Chimerix shares are up 70% right now. A good day today. But it's far from all wine and roses. If you go back 10 years, look at that chart. Chimerix has crushed investors, losing about 80% of its total value. It's just one example of how hard it can be to make money in biotech. Stocks, they may seem cheap, but if a drug trial fails, the company can sometimes fail right along with it. So are there any safe or good places to put your money in biotech? With us, Jared Holz. He's a healthcare strategist with Mizuho, some of the best research notes on Wall Street. Jared, thanks for joining us. I mean, your notes, your firebomb, I love it. You wrote this. You said, why don't we do this? Count all the number of, and I'm reading, count all the number of biotech stocks with enterprise values below zero, combine them all, then dissolve them, give shareholders back a ton of cash, billions, maybe keep around a couple for fun, the ones with the clever tickers. What point were you trying to make to investors with that?
Well, great to see you. First of all, thanks for having me. Yeah, I mean, when you look at the denominator of biotech stocks in the public market, we're kind of like in the 700 to 800 range, given or depending on the day. There are, a quarter of those almost have enterprise values in negative territory. That basically means that, investors have kind of, not only investors, but the companies in some respects have exhausted options. And in order for, any value to be created, they're going to have to either shift their focus, come up with another plan of attack, buy an asset that they don't currently own, resuscitate the company. And so in some respects, we're always looking for, some clear pathway for biotech as a sector to perform better. But if a quarter of the index is filled with companies that have more cash than market cap, I think we're in a tough place. So that's why I kind of suggested, and obviously some is hyperbolic, of course, but let's get rid of a lot of the tail here. There are too many assets out here.
But it's so attractive to some investors or traders or gamblers, whatever you want to call them, Jared, is it not? Because let's say there's a stock, it's at $5, and somebody tells somebody who tells somebody, I think that company is going to cure cancer, right? And it's $5 a share. And you're like, all right, you know what? If they do have a great drug trial result, the stock may go to 100, right? Maybe it's the next Amgen or whatever. But if it doesn't, it could go to zero. It's a very tempting scenario sometimes.
It's incredibly tempting. There are thousands of investors that are, putting their careers on the line every day to try to figure this stuff out. I would kind of characterize biotech as one of the only sectors in all of equities where single stock picking is pretty much the only way to make money. I mean, I've been covering the space for a while. Over the past decade, the index is barely up. I mean, it's essentially flat. Meanwhile, every other index that I can find has doubled or more. So there's an obvious issue with the broader complex. But like you alluded to, if you find the right asset, you can kill it.